What is going on with the real estate market here in Canada? Today, we are answering these important questions. Obviously, we're starting to hear signs that the bull market could potentially be back, and we're going to break it down looking through a various number of topics. We got a lot on tap today, but just to highlight a few things, we'll look at credit issues. We'll look at new listings that are heading onto the market. We'll take a look at some macroeconomic trends such as population growth. And most importantly, stay tuned to the end. We'll give what Royal LePage prediction is for the real estate market through the remainder of the year. But if this is your first time here, my name's Nick and welcome to Ways to Wealth. If you're a fan of checking out sites like realtor.ca or House Sigma, you'll know right now that there's not a lot of inventory. For myself, when I take a look at the market, it seems like there's slim pickings, and that's where I figured it'd be a perfect place to start this video by taking a look at how much inventory is on the market and just how frequently new homes are being listed. So we'll jump over to this article here and we read that sanity is slowly returning to the housing market. While some buyer hopefuls remain sidelined by reduced capacity to borrow in this higher rate environment, our data shows that many of those who chose to pause their search to see where prices and interest rates would land have resumed their home buying plans. Unfortunately, the challenge must now be to deal with a severe shortage of homes for sale. And just how severe is this number? Let's jump over to this other article here. Could a lack of supply lead up to that pent-up demand that we just read in the previous article? Well, let's take a look at this chart here. It shows home sales strong on tight supply. We'll hone in here on Toronto. The blue line is the percentage in change in sales, so how many sales are happening. And then the yellow line is the percentage change in new listings. And the first factor that you see right off the hop is that there's not enough new homes for the amount of sales that are happening. So what you're doing in an economic term is you're limiting the supply. You have a multitude of different buyers that have noticed the Bank of Canada has paused, have been waiting for the housing market to cool down, which it sort of has so far, and now they're looking to buy that home. So you have a multitude of different buyers, but not enough supply. So we almost get a little bit of this bidding war that has been happening. Let's read a little bit further. So Royal LePage said demand again is outpacing supply as buyers return in force. First-time home buyers are entering and the supply conditions remain ultra low. With demand rising, the number of new homes listed for sale would normally be expected to be rising rapidly, but inventory is not keeping up. So we'll jump over to this other chart here, which compares the sales to the new listings. And what we can notice right off the bat is that traditionally over time, these numbers do kind of work in unison. With the number of listings will equal the number of sales. And from there, we can see as we head towards these last 3 months, there just happens to be a total decline in how many new sales or how many new listings are on the market. Now, on a positive note, this is a really good sign for what's happening in consumers' pockets. People aren't rushing to put their homes up for sale, which means that the market seems to be pretty good with even how much the interest rates have risen over the past year. But then obviously we're still in the early innings. We're still at the early stages, and that's obviously one of the negatives, is that obviously people aren't putting their houses up. We're getting buyers that are still willing to buy in these market conditions. It's going to create a little bit of a false sense of demand, but we'll more specifically focus in on some of those credit issues that we talked about in the intro. Ron Butler is a guy that I follow on Twitter that is a mortgage expert. I definitely get a lot of advice from him, but let's see what he has to say about what the credit availability is like in Canada. And we can see, is it getting tighter? His answer, plain and simple, is no. He can't speak for other products. His specialty is mortgages, and he's heard that comments regarding the credit tightening is expected, that the bank turmoil in the US will spill over to Canada, suggestions that the possibility of recession might create caution in lending, and then will that cause mortgage lending to become tougher? The answer is again, no. We detect no change in underwriting standards, no tightening, none of that. it's mortgage business as usual. The simple reason for this is that the 90-day default rates are still at record lows. What was previously the lowest default rate at 14 bips is only up to 16 bips. So this is not a big increase and kind of not that big mass panic sell that a lot of people, much like myself, were predicting. Again, early innings, but let's take a look at some of those macroeconomic factors that we were talking about. And we jump over to the immigration.ca page here just to get a sense of how things are going so far in 2023. Canada's immigration spiked nearly 40% in the first 2 months of this year compared to the same period last. In January and February, Canada welcomed over 100,000 people compared to 72,000 the year before. That level of immigration, if it were to continue through the rest of this year, would result in over 602,000 new Canadians or permanent residents so far this year. And obviously that is far in excess of what Ottawa's target is of 465,000. So when you look at these numbers, you have to factor in of where are these people going to live? They're obviously going to settle in bigger cities. Ontario happens to be one that is probably one of the most popular. And when you look at the situation already today, we're kind of in a situation where there's not enough housing as it is. So now we're bringing in so many more people, and then you factor in already tight supply on the housing side. Could this be one of the bullish factors for Canadian real estate? And that is definitely something to chew on, definitely something to consider, because for me, I feel like it's one of the only things that's holding it up, especially with where prices are, where interest rates are. I find it hard to fathom that we continue on this pace, but that's not the only research that we've done today. We are going to move on to the next topic, which is a change in policy. What's the change in policy, you ask? Well, the CMHC has announced several amendments to the legislation allowing non-Canadians to purchase residential properties in certain circumstances. So we won't go too much into detail, but what we had previously experienced is a foreign buyer ban, basically saying if you're not a permanent resident, if you're not a Canadian citizen, you are not allowed to buy property in this country. Well, that only lasted for so long because, sometimes it just doesn't make sense. I think they jumped out with that rule a little bit quickly. Some of the things that it basically will help out on is anybody that's working here for an extended period. These permit holders must have at least 183 days left on their work permit at the time of purchasing the home, and they cannot already own a residential property. So that is just an example of what has changed, but this could also add to the demand. And when we talk about all of these factors increasing on the demand side, the supply side still being tight, again, maybe another thing that's signaling that this could be higher for longer. And one of the things that would basically wrap it up is to take a look at what the construction situation is like here in Canada. And we'll jump over to this Better Dwelling article here that states Toronto real estate remains the king of cranes. They have a whopping 238 deployed in Q1. That's up 8 from the previous report. And one of the shocking facts is that there was 31 projects completed in the past 6 months. These companies are trying to put up housing in Toronto, lickety split. The next highest city in terms of how many cranes are up is Seattle at 51. That'll give you a magnitude of just what's going on in this city. Although there could be commercial taken into account here, commercial real estate development is actually on a downtrend. This, for the most part, would be considered mostly residential. So we are trying to help with that housing supply issue, build some new homes for all of the people that are looking to get into the real estate game. So we're trying to help out on the supply side, but we all know that it takes time to build. But nonetheless, we are looking to develop. And obviously, if you're developing, if you're a business and you're investing money, you definitely see the upside here as well. So where does that leave us? What is going to happen from here on out? Well, I'll be the first one to put my hand up and say I do not have a crystal ball. These are just some of the things that I'm watching, but let's listen to what Royal LePage has to say about what is going to happen for the remainder of the year. So they are forecasting that the aggregate price of a home in Canada will increase 4.5% for the remainder of the year. And this previous forecast has been revised upwards to reflect an earlier than expected boost in activity in Canada's major housing markets. So when we look at the forecast here, we can get an explanation and understanding of where they see these numbers coming from. Although not a big increase, they're seeing steady increases throughout the remainder of the year. It's hard to imagine, it's hard to fathom. We just had, record level interest rate increases over the past year. A lot of people are hoping that the housing prices can correct so they can finally buy their first home. Myself, I'm looking at some areas in the Greater Toronto area, and it's been so crazy on the housing supply issue. It seems like houses are infrequently going up, sitting for a long time, or they're underpriced, and all of a sudden there's a bidding war that comes in. It's a very finicky market right now. I'm kind of sitting back, still doing research, still waiting. If I miss out on this bull run, it's something that I'm prepared to do. If I make a purchase, I'm going to make a purchase with the mindset of 10 years down the road, not too worried about what price fluctuations doing in the interim. That's just some of my thoughts. Let me know down below what you think the real estate market is going to do here in Canada for the remainder of the year. And if you enjoyed this content, check out some of the other videos that we've done on real estate. I'll link some right here and right here. I hope you all have a great week in the markets. Happy trading.